So, today we're going to dive into something really interesting. It's this huge clash happening right now. You've got the market's biggest fears on one side, and on the other, this really powerful signal that's kind of hiding in plain sight. And you're not going to believe this, but the key to figuring it all out, it actually lies in a story that's 400 years old. Seriously.
Okay, so let's just get right to it. The one question that's on everybody's mind right now is this it? Is the big crash finally coming? It just feels like the entire financial world is holding its breath, just waiting for that other shoe to drop. But where's all this anxiety coming from? What's really driving this feeling?
Well, for one thing, the warnings are coming from the absolute top. We're seeing this incredibly rare moment where some of the heaviest hitters in the game, we're talking Goldman Sachs, Warren Buffett, Michael Howell, they're all basically saying the same thing. They're all pointing to a pretty significant drop in the S&P 500. And look, when names like that all line up, you better believe the market listens.
And oh yeah, the market is definitely paying attention. This isn't just talk anymore, it's actually translating into real action. You've got fund managers, individual investors, you name it. They're hearing this chorus of warnings and they're starting to brace for impact. They're positioning themselves for a storm.
And hey, don't just take my word for it. Here's the proof. Take a look at this chart. What you're seeing is the net exposure of hedge funds to risk assets. Basically, how much risk they're taking on. And the big takeaway here is that right now, today, their exposure is at levels we haven't seen since the absolute bottom of the COVID crash. That means the pros, the smart money, have already bolted for the hills. They've slashed their risk like crazy.
So, all of this together really begs the question, right? Is this it? Is this the big, much-talked-about correction that finally clears the slate? With this much agreement from the big guys and this much fear already priced in, it sure feels like we're standing right on the edge of a cliff. But not so fast. What if everybody's wrong? What if all this fear means the worst-case scenario is already baked into the price? What if the crash that everyone is desperately waiting for has kind of already happened, just quietly, under the surface?
Because there are some really compelling clues that point in the exact opposite direction. Yeah, as we saw, the hedge funds have already sold. And yeah, the number of people buying put options for protection has just spiked. There's a literal mountain of cash just sitting on the sidelines. But maybe the most powerful signal of them all? Corporate insiders? They're buying stock in their own companies. Now just think about that for a second. Insiders, they might get the timing wrong when they sell, for all sorts of reasons. But when they take their own money and start buying, they are rarely wrong. They have the ultimate inside scoop on how their company is really doing. And right now, they're sending a very clear signal. They think their stocks are a bargain.
Okay, so to really understand why this signal is so important, we have to do something a little different. We're going to step away from the trading floor entirely. In fact, we're going to travel back in time. Because believe it or not, a 400-year-old story about naval strategy has a shocking amount to teach us about the market today.
And our lesson starts right here, with this idea of a maritime choke point. Just think of it like a bottleneck for global trade, a narrow strip of water that everything has to pass through. Simple, right? But whoever controls these passages, well, they control the flow of wealth and power. It's a simple idea, but the implications are just massive.
So back in the 15th and 16th centuries, the absolute master of this strategy was this Portuguese admiral, Afonso de Albuquerque. He was smart. He knew that Portugal, this tiny country with maybe 1 million people, was way too small to go out and conquer huge empires. So he did something different. He focused on controlling the choke points. By just grabbing a few key spots, this little country could totally dominate all the trade between Asia and Europe. It was absolutely brilliant. And the crown jewel in his strategy was the Strait of Hormuz. For more than 100 years, this one spot was the linchpin of the entire Portuguese Empire. It was where so much of their wealth came from. But then, by 1622, they lost it. So what on earth happened?
Well, here's the thing. The fortress didn't fall because of some massive, overwhelming army. It fell from the inside out. Corruption was everywhere, and the soldiers were completely demoralized. They stopped investing in its defenses, so they got weak. All the political infighting meant nobody could make a decision. See, everyone thought Hormuz was invincible. That was the consensus. But underneath it all, a rot was just eating away at its foundations.
And you have to understand, losing Hormuz wasn't just some footnote in a history book. It was a massive seismic event. The impact went way beyond military or economics. It literally echoed through art and culture for centuries. It became this incredibly powerful symbol.
For example, right after it fell, the great Spanish poet Francisco de Quevedo, he used it like a weapon. He wrote this line in a sonnet, and he wasn't mourning the loss. No, he was using it to directly attack his own king, Philip IV, for being incompetent and clueless. The fall of Hormuz instantly became shorthand for, "Your empire is failing."
And the legend just kept going. Even hundreds of years later, you have the famous poet Rubén Darío using the pearls of Hormuz in a poem as the ultimate symbol of exotic, unbelievable riches. The name itself just became another way of saying legendary wealth.
Okay, so let's bring this all back. We've got a market that's on the verge of a full-blown panic, and we've got a fortress that fell 400 years ago. What in the world is the connection? Well, the parallel is actually way more direct than you might think.
It's actually pretty striking when you lay it out. Back in the 17th century, the consensus, what everybody believed, was that Hormuz was impenetrable. And while they were all focused on that, they completely ignored the internal signals, the rot from within. Now, fast forward to today, the consensus is that a market crash is coming, it's inevitable. And while everyone's focused on that, they're ignoring a really powerful internal signal of strength, the insiders who are buying.
So here's the real takeaway, the crucial point. It doesn't matter if you're managing an empire or your own portfolio. Groupthink is incredibly dangerous. The consensus view, what everyone knows, can create this story that's so powerful it just blinds you to the stuff that's less obvious but is often way, way more important.
And that really leaves us with one final thought, one last question. This whole story forces us to ask ourselves, what are the real strategic choke points of our economy today? And maybe more importantly, are we actually investing in them, making them stronger, or are we just letting them decay from the inside out while we're all distracted by the day-to-day noise? Now, that's a question worth thinking about.